Bitcoin fell by another 3.9% yesterday, kind of in line with our expectations, but there is some differences going on here that is making me wonder whether or not we're actually going to hit those targets that we were talking about yesterday. So in today's video, I'm going to be reviewing the price action, given this new data on the 1 hour and daily timeframes, and giving you an update as to my thoughts and opinions as to where I think the price action is going. As I get into today's video, smash that like button if you're new, subscribe, and let's get into it. So here we have Bitcoin paired up with the USDT. We're on the 1 hour Binance chart, and well, we saw this move to the downside yesterday, and well, yeah, it kind of come down quite nicely, but it hasn't really reached the levels of expectations. We are looking for this price action, or we're looking for this price action to come down into a 1.618 to 1.236. This area just here, basically 56,716 to 57,527. It should be a more straight line drop, but we're not really seeing that. We are seeing still bearish patterns forming here. We can see that we're overbought here, so we are still looking for slippage to the downside. We do have our trend line still here in place, and of course, if I take that out of consideration and actually start showing you the idea of a triangular wedge pattern right in here, which is a continuation, that we are likely to see slippage to the downside. Now, this interesting structure that we have basically tells me that we're not impulsive in this fifth wave movement. And so there's a couple of different ways that this can play out. Okay, the super bearish one is that it just completely collapses and drops down significantly further than our range here. And that's because we have an overextension. The more kind of conservative approach would be that we have some kind of diagonal, or alternatively, because I'm always open to ideas, I got this structure wrong. It doesn't necessarily mean that we're not going to come down to our target range. It just means that I got it wrong on how we get there. So I'm going to, first of all, ignore the 5-wave move at the moment, because that's not really what we're seeing inside our data here, but we are seeing a bearish pattern. So I want to kind of reflect on that a little bit. And I want to take this down to a 15-minute time frame just to kind of see the structures that we see within this move to the downside. Okay, so we do see this kind of overlapping structure here, and that's the concern that I have. And of course, this overlap here with this area, this basically tells us that this is very corrective to the downside and it's not impulsive to the downside. And the reason for that is if you try to make impulsive moves here, we can see that we just would break down. We have this overlap here that crosses this level, and then you have this big drop. It doesn't make a lot of sense. Even if you try to go ahead and say, well, what about if we have that wave 3 down here and we have the drop there? That would be fine, except we then see this additional kind of overlap structure here, which doesn't make a lot of sense either. So if I go ahead and measure this distance right inside here and we pull that to the bounce, well, we should be hitting 1.618 and we don't. So it doesn't look to me like this is an impulsive breakdown. So this is going to be a very corrective pattern to the downside, 𝗕𝗪𝗀𝗀𝗀, for example, a bit of a push to the upside, which is fine. This move to the upside is not irregular, I don't think. It looks pretty standard to me, falling just short of its target, but very standard. And this is kind of in line with why I went short on Cardano within the Discord community yesterday. And this was because it made sense to do so. We were kind of pushing up into the range of expectation and we're looking for a move to the downside. So for Bitcoin here, we can see that we are likely to see further downside. This continuation pattern is interesting. I would be looking for a potential short on Bitcoin, but maybe even altcoins, where we do look for the next kind of targeted range coming down here just a little bit further, between 58,100 and 58,400 to keep nice round numbers, and that will be the approach. Now, as you can see on the 15-minute time frame, we're getting rejection right here on these EMAs and SMAs. I'm not too concerned about the smaller time frame stuff. I'm going to bring this back to our daily, and you can see that this move to the downside is not a massive move. It's not going to bring us down to our targeted range. So we're going to see whether or not this does break down further, or whether or not we're in some kind of a bigger move to the upside. Okay, so we have this idea that we have a 3-wave drop into here, but this is actually a part of a bigger 3-wave move to the upside, back up into this upper area, where we then can start thinking about whether this is going to be a diagonal structure like so. And as you can kind of see, it starts to get complicated, right? And I know a lot of people don't follow Elliott wave theory overly well, and so I don't want to overcomplicate things, but for the most part, as you can kind of see within a chart, this is kind of how I'm looking at the market right now. It's quite indecisive. And as I've been talking about in previous videos, this pattern here that I'm potentially mapping out is also showing us the idea of just extracting liquidity from the market. It's happened time and time and time again. And it looks like this is happening even down here in these lower ranges. Now, we do have this idea of our trend line. Again, this would then pull us down a little bit deeper and so forth. But for the most part, I'm looking for this fifth wave and I'm just not thinking we're there yet. Okay, so I'd like to be wrong on that. I'd like to kind of get this over and done with, but I just don't think that's going to be the way. I think we are going to move down just a little bit over the next kind of 24 hours. We target it out that kind of 58,100 to 53,400. And then we bounce up into this upper area of resistance, 59.7 to 6,100. And then that's going to coincide with your 50 EMA, 50 SMAs, which you see here, which will be our resistances alongside this area. And that's where we go short on the market and we then target out that additional range. So I don't think it's impossible for us to get down into these lows. I just don't think this is the pattern that's going to get us there. So what we're going to do is we're going to go short somewhere in around this area in the next kind of maybe 4 or 5 days, and then we target this out. And again, my minimum expectation is always 1.5, right? I talk about this all the time, right? 1.5 risk reward ratio is kind of where my aspirations lie. That is because I like to make 20% on my trades every single time, every single day, multiple times over, rather than trying to hope to get like 100% or 200% or 1,000% in gains. I'm not all about those big leverage positions, and I'm not about sitting in a position for such a long time that you kind of see all those gains come and go because it just doesn't quite hit your take profit. I'm all about making sure that I have proper risk management and I'm not too greedy, right? And so I would rather take 20% moves over 100% move if I am doing it more consistently. So as you can kind of see here, this would just bring us right back down to this previous area of consolidation. If I were to use this idea, I would be looking at stop loss at around 60,650. I would be looking at entry around, let's say, 59,000. I'm going to actually go ahead and change it to 60,000 flat or something to that effect, and then target out 1.5 on the risk reward ratio. Which would put us right about here, take profit at 59,139. And that there with a little bit of leverage is going to get me my 20% that I'm looking for. And it's going to put us right down into this previous consolidation range. Of course, there's going to be more profit here. And I do think I like to move down. I just like to lock in profits as I go. So that would be my approach to it. I'll be looking for rejection off the 50 EMA, 50 SMA. And of course, if we don't and we do rally up and we have kind of finished off these lows, because there is a reasonable amount of buying pressure down there. And if we do get that breakout situation and we get a couple of candles above the 50 EMA, 50 SMA, I would be inclined to maybe go long up here with targeting out the 200 EMA, tight stop loss, 1.5 risk reward ratio again, and then look and see how the price reacts to the 200 EMA, which is currently sat at 61,473. And again, if we get rejected there, go short and so forth, and repeat the process, because there's so much liquidity to be extracted here that trading can be insanely profitable if done correctly. And of course, I'm not overly greedy. So taking a look at everything here, that's kind of my approach. And if I were to be trading, I'm going to be trading on BitGet or Blowfin. They are my go-to platforms. If you can't use BitGet for jurisdiction reasons, then check out Blowfin, linked in the description below. It's completely KYC free. Obviously, you get extra benefits if you do KYC, but you don't have to do KYC. So it's a fantastic platform to use if you haven't done so already. Go ahead and check it out, linked in the description below. There's some fantastic sign-up deals as well, depending on where you are around the world. Okay, so Bitcoin on the 1 hour time frame. Hell, expect volatility, the kind of the message that I've been talking about for a while now, right? Basically, expect the unexpected and expect to see big swings in the market on the smaller time frames that basically just extract liquidity. What about the larger time frames? Well, the larger time frames are quite interesting as well. If we come up into our daily time frame, what are we looking at? Well, we hit the upper area. We are still looking at this as 5-wave impulsive breakdown. We are, of course, closing lower than that 200 EMA. We got 2 candles here, so we should be thinking about shorts on the market on the daily time frame. We obviously are still looking for this move to the downside, and of course, depending on your appetite for risk, we could be looking at that move down even deeper towards 44,000. But I expect to bounce before we get there, so I wouldn't be shorting just yet on the daily time frame. That is, obviously take advantage of the smaller time frames until your heart's content. But I'm still looking for the completion of this 5th wave move, and then we'll be looking for a relief rally where I expect resistance to be found on the 50 EMA, 50 SMA, and then from there I'm going to be looking at this as a bigger kind of breakdown, which will see significant returns on investment. Here we'll obviously go in for a longer term short. Again, I'm going to look for 1.5 risk reward ratio, which is basically going to test out these previous lows, to be honest with you. I may just move the stop loss and do a trailing stop on the daily time frame, rather than actually coming out at 1.5 risk reward ratio, because this one's going to be very, very lucrative, potentially coming down here. And of course, we can reverse this once we complete that Y wave structure, which hypothetically, if we do complete this kind of idea, then we are going to be looking for us to kind of be testing out $54,000 to $52,000, which could be a fantastic place for a short up here into that particular range. Once that's done, of course, we can then go into a long position and target out the bounce, which will take us back to the previous area of consolidation and resistance. And then from there, we go down into those lower ranges of $40,000, in my opinion. Now, on a bigger macro scale, guys, it will look something like this, where we can see that kind of slippage to the downside, where we test out that lower trend line that we've been testing out before. Of course, things can change, but that's going to be my approach to this if it all plays out as it is mapped out in my head. But on the daily time frame, yeah, things are kind of mapping out and working as they were kind of expected. We're almost in an oversold area on the daily stochastic. We are oversold, but the smoothing of K, the white line, not there yet. So we are still looking for this move to the downside before we push on up, in line with our hourly and 4-hourly charts. So yeah, everything's kind of just playing out quite nicely here. Looking for that relief rally. We're looking for a bit of a run to the upside, hitting upper area of resistance, which in my opinion is going to be around that 61,100 to 61,500. Maybe it'll push a little bit more, but I don't think so. Right in line with the right in line with the 50 EMA, 50 SMA. So brief breakdown below that 200 EMA as we had seen previously. Relief rally, then dump again. All of this is a part of a much bigger play though, guys. If you kind of zoom out of this, you can start to really map in all of these kind of structures that we're talking about and how we get down to that $44,000. Again, this is still subject to change, but this is something that we've been talking about and mapping for quite some time on Bitcoin. And it's good to see that things are kind of playing out slowly, but they're playing out as expected for the most part. Guys, you can let me know what your thoughts and opinions are on all of this in the comments down below, or join us in our free Discord server linked in the description. And if you have found it useful and informative, smash that like button. If you haven't done so yet, check out my second channel over here where I go through the Cardano analysis every single day.